Okay, so today is one of those days that went red. Although the market's now up, it's in the red. So let's take just a quick look at the market timing and see where the market is. You can see that we've got lower lows trending. We got 5 lower lows or 6 actually, or 7 even, 7 lower lows in a row. So that's meaningful. That lets us know that the market's red and it's trending down. Yeah, could it reverse? And it looks like it may be reversing today. Yes, but we're a long way from having that reversal be called over. So right now we have to play the trend as it shows up. This could change today, tomorrow, next week, but the trends and the probabilities are in the favor of the stock moving down. Okay, so we're looking at Tenet Healthcare as a stock that is trying to move down. You can see, well, first thing we'll do is we'll just draw a Fibonacci level here so you can kind of get an idea of where it naturally wants to go. You can see here's the top. This is the full move. Look at it bouncing perfectly to a 382, and now it's going to go to well, for sure the 41.26 is where it wants to go, but really we think this support level right in here, which is the support level from the 18th of April last year. And so anyway, that's about $38, and the official projection level says 35. So somewhere in this area between 35 and 38. Okay, so what are we going to do? First of all, let's look at the daily action. You can see it's a bloodbath in Tenet Healthcare, but it's outside the envelope, so there's a good chance it could bounce. It may or may not. So what we're going to do is we're probably going to have to play a spread, and here's why. So let's take a look here. Here is the options chain on Tenet Healthcare, and you can see that over here are the puts. And right now the puts are trading for, let's say we want to look at the 38, since that's our target, maybe the 39s. We'd have to pay $255 for a put on Tenet Healthcare. Well, the theoretical value according to the Black-Scholes model is $1.97. That's pretty pricey to pay for that extra 60 cents or so for that stock to go to 39. Now today it's 41.87, and that's only $2 down, but it's got to exceed what we pay for the put. So here's the way we're going to play it. We're going to take a look at the spreads, the vertical spreads. We'll go one width apart, and we'll play back out to that 38. Now look at what it says. It says that the theoretical value is 32. And you can see that's within the range of the bid and the ask spread. So it's 20 cents to 45 cents. Pretty big spread. But again, this is a debit spread. You're not having to pay as much money as if you just paid out of pocket. You're going to be buying the put, and you're also going to be selling a put against it. So it's going to cost you a little bit, but the idea is that the offsetting cost of buying the put is offset by that selling of the put. So you get to pocket some of that premium on the other side. So that's one way to look at it. Let's spread it out a little bit. Let's say, okay, now we're going to have a 2 strike price spread and see what that does. So we want to look at that 38 level, somewhere in there. So we've got a 37-38 spread here. Oops, I don't know why I didn't change to 2. Okay. So we're right in here in this price here. You could see 45 to 75. Big spread, but 60's right in the middle. So we think that if you sell that or buy that spread, what that means is you buy the 36 put and you sell the 38. Sorry, you buy the 38 put and you sell the 36 put against it. So it's going to cost you a little bit of money. Hopefully it only costs you can get a fill around 60 cents. The goal is for this thing to start approaching $38. This is a out of the money put, but as it starts to approach that $38, it's going to go in the money, and you should get a delta, which is about 7 cents. You're going to have 7 cents for every dollar that this increases until it starts to get in the money, and then you're going to see a rapid increase in it. So it's pretty cheap value to play this downward move in Tenet Healthcare. So that's what we're looking at, is a put vertical spread, the 2 wide, it's 36-38 spread, and you would go ahead and buy this spread. Don't pay 75 cents. Try to pay around 60 cents for this spread. And remember that if it gets down below, say 38.60, now, 37.40, which is 38 minus the 60 cents, let's say, 37.40, that's where you start to break even and you start to make money on the other side. This thing goes below 36, boy, you pocketed all that you've pocketed and started to make money on it. Let's analyze it and see what that looks like. When you look at that, you can see that as the stock starts to go down, okay, so it starts to go down from where it is now. Let's say 42, 41.87, somewhere in here. Okay, you can see that as I move to the left, as the stock starts to go down, the amount of profit, see that number right there? That amount of profit starts to rise. So for this position, you can see that you're really at 38 making some good money, and then it continues to rise until that's basically it. Your spread kind of tops out at that point. If you just bought the puts, you'd have a good amount of money on the downside, but since you're just buying the spread, you're going to be capped. So if this thing moves way down to say 22, you're still not going to make that much more, but you're going to make your most amount of money. You can see your most increase right in here. Okay, hope that helps. 60 cents on that spread. Good luck.